There have been a lot of surprises for gold in 2024. Most all of them have to do with gold breaking new records, but that can only happen for so long. So what about the experts and what they are saying now, and the big banks around the world? Could they actually be wrong? We'll discuss it in this video as we explore. Most of them are wrong. Most of the prognosticators out there, myself included, are wrong. There's a lot of surprises that can come our way in the precious metals markets. And it's very easy when you see records broken again and again, and by the way, again and again, that to be confident that it's just going to keep on going up. And it could. But one thing I like to do is give a little bit of a nuanced discussion and look at both sides of the fence, the bullish side and the bearish side. And as I record this video, well, precious metal prices are down fairly dramatically. And but by the time you see this video, they could be back up again. So there's always that possibility, and we have to take into account for that, because it seems like things are changing so fast in the markets that this could be a blip in the radar, and just the prices keep on trucking along. But the fact is, we are just days away from the presidential election, and who knows what the aftermath of that might look like. And so it's going to be a very volatile time. But there are a lot of predictions that have been to the positive side and have been boosted across the board. Remember, the community shared with me a piece here by Eric Sipanek that gives us a little bit of insight as to what's going on and what has been said by a lot of these folks. Gold has kicked off the year in 2024 with some impressive gains, causing experts to revise their predictions a few months ago. However, gold didn't just hit those expectations, it blew past them. Thus far in 2024, gold has climbed well over 30%, even with this latest pullback that we've been seeing. Instead of calling for a pullback or pause, experts are, once again, raising the bar for where prices could stretch this year and beyond. Understanding these renewed forecasts can give investors valuable insights into what may lie ahead as gold ventures into uncharted territory. But keep in mind that they could be wrong, especially if things continue as they did yesterday and we continue to see a downward movement with gold prices, which can be very easily justified as saying, well, it's been up for so long, it was due for a consolidation or pullback. And again, I'm saying this without knowing what the markets are going to be like by the time you see this video. But gold prices have been on a tear throughout 2024, and we see its gain just keep moving up and up and up with little dips here and there. But for the most part, we've not seen much of a dip like what we saw yesterday. That was a pretty big dip considering and comparing to previous trading sessions. Gold has launched into the new year at $2,063.73 an ounce after a respectable 15% gain last year in 2023. For much of the middle of the year, prices hover between $2,300 and $2,400 an ounce. The Federal Reserve's aggressive rate cut forced the metal out of this holding pattern, sending it far past the $2,600 range and barrier. The most recent high that we've seen before the big dip, before the dip we saw yesterday, was $2,748.91. That puts gold's rise at roughly 32.6% so far. Despite the stellar rally, experts are telling investors to prepare for further growth ahead. Now, I say that they could be wrong about this, but they could also be right. Like I said, this could be a blip, and I think a lot of it has to do with what the election, how the election is going to pan out, but also geopolitics is going to play a huge role, and more central bank gold buying. That is crucial, folks, to think about. So let's run down through some of these big institutions. We have Citibank, who had their price prediction at $2,100 an ounce. They've now revised it to $3,000 by the end of 2025. Bank of America, their original forecast was $2,400 an ounce. Well, when it reached that and surpassed it, they have increased their prediction to $3,000 by 2025. So did Commonwealth Bank, so did Goldman Sachs, and so did the World Gold Council. Really, it's not much surprise there with the World Gold Council, but I digress. You know, it's fascinating. Now, ANZ, theirs was $2,394. Theirs is a little bit more realistic at $2,900 by the end of 2025. That could happen. But SocGen, which is Société Générale, I guess it's a French institution, theirs was originally $2,460. They have now revised it for the average for next year in 2025 to $2,800. Very doable, very, very doable, even with this pullback. ING, they have revised from $2,150 to $2,700. Well, that's been met. TD Securities did the same thing, so did UBS and BMI. JP Morgan, well, they've not had anything. Well, and the thing is for 2024, they said $2,600 after revising upwards. They've already been correct there, but I thought they made a call of $3,000 as well. Commerce Bank, they have $2,600 is what they're saying for mid-2025. Now, if these are very, very new numbers, they may think that the prices are going to go back down to those numbers. We shall see. World Bank Group has the smallest at $2,350 as an average for 2024. We'll see. But anyway, the experts have that and what they have been saying and what they're doing, and a lot of them are very, very bullish. But keep in mind, the most stringent ones to study, look at data. They are very well could be just as wrong because of the psychology of the markets, and that sentiment very well could lead to just a further drop in prices, especially after being up for so long. Sooner or later, there's going to be a consolidation period for gold. What does that consolidation period look like? What is support for gold? Well, my guess is it's probably going to still be well north of $2,500 when it's all said and done, if we see things settle down domestically and geopolitically. In other words, as I mentioned in a prior video, if one candidate wins handedly and you come to the grips of what that new candidate, what that new policy is going to be, what that new president is going to do, well, it's going to give you an idea, an adjustment for the markets, and the markets will react accordingly. And for the short term, that may actually be bad for gold, and no matter who's elected, because that means, well, you know what, we can breathe a sigh of relief. We know what we're dealing with here now, depending on who gets elected, and we'll adjust accordingly until such a time another scare comes along, and that could happen more so with one candidate than the other, I feel. But, and again, there's not much rationality in the markets. So that is what's leading it. But there are some things that are fueling the rally and that will likely be sustained at least at some point, which is why I don't think it's going to fall much below $2,500 in the best case scenario in terms of geopolitics and domestic ease, I guess, as far as how we're going to deal with things in the country with a clear winner. Interest rates will continue to be cut. And that is going to be very good for gold, and no matter what. And in fact, the anticipation of rate cuts bolstered gold's rally throughout the first 3 quarters of 2024. And the Fed has already cut 50 basis points, and likely going to do a quarter point before the year is over, and maybe even another one, who knows. But that is something that is going to keep gold up and going to be why it's always considered the ultimate safe haven. The next thing is going to be sustained central bank buying. There's going to be a lot of central banks that are going to be continuing to accumulate gold. Why? Well, because of what's going on around the world. Even if tensions ease, there really is kind of a currency crisis. And our nation is not immune from it, because I think inflation likely will creep back up again here, and likely to some extent in other nations. I mean, China has already done another round of quantitative easing in their country, and other nations around the world very well could start to cut interest rates and maybe even ease their policies as well too. That's going to lead to more inflation, I feel. And so many of these countries, and even smaller countries, Western countries as well, are going to continue to accumulate gold. And geopolitical tensions likely, no matter who's elected, will probably stay fairly tense into 2025. But you know that is a bullish sentiment for gold. Now the other thing too is, and I don't know that how much this really has to do with it, because the global and and debt levels in the United States, they are going to continue to be up. But how many people really care about that? That's the thing. You and I care about it. The markets don't seem to give two poopies about about what happens with the debt. It's crazy. And you know, we have $38.6 trillion of debt here in the United States. Globally, it's about $312 trillion, but nobody really seems to care about it, because the behind the scenes impact of modern monetary theory makes it unlikely that spending printing cycle will cease, no matter who is elected. And of course, de-dollarization is something else. When the dollar loses influence, that means that it's going to weaken compared to other currencies out there. We're seeing that more and more, and likely by 2030, Zimbabwe, if not before, will also abandon the dollar, which is not going to have that much of an effect. But if they hold true to that, well, that's one more little nick against gold, or against the dollar. So there you have it. Let me know what your thoughts are about this situation. Have they called it too soon? Do you think we're getting closer to consolidation period? Is the latest dip in precious metal prices, especially gold, the first sign of consolidation? Let me know what your thoughts are down in the comment section below. Hope you found this video informative, insightful, and educational. I want to encourage you to please rate, share, comment, and subscribe.